Hello, everybody. Thank you for joining us today. With me is Paul Glenchur, our senior media and telecom policy analyst. What we'd like to discuss today is the recent ruling from the FCC, which Paul's been speaking about at length very frequently lately. Paul, thanks for joining us.
Pleasure to be here.
So maybe you could just give us a quick rundown on what the FCC decided for today.
Yeah, it's a proposal, actually. They haven't decided yet, but what they've proposed to do, and they'll maybe get the final rules before the end of the year, is to try to open up a retail set-top box market. Now, there's some statutory authority for them to do this, and it's actually been something that they've worked on before. They're finally pushing it very hard with this proposal that they adopted yesterday. The proposal is to basically force cable operators and satellite operators and even telco TV providers like a Uverse TV or a Fios TV for Verizon to make available the menus, the content offerings, and the content streams themselves to third-party device manufacturers, companies that could make set-top boxes or other types of video navigation equipment that customers could buy at retail. So you go into a Best Buy and buy a set-top box made by somebody unaffiliated with your cable operator and use that, get rid of the lease fees that you pay to rent a box from a cable operator. Now, those rental fees are something like $20 billion a year to the industry. And the idea is they could actually get innovation and lower costs to consumers if they can just go out and buy a box at retail. So that's what the FCC is trying to push with this new proposal.
I see. And you just detailed the threat to the ecosystem. So, it's not just cable that's pushing back. I mean, it seems like it's the entire ecosystem right now, the entrenched players.
That's right. I mean, you think about what people talk about all the time now. They're worried about, cord cutters, consumers that say, I'm not going to take cable. I'm not going to take it satellite. I'm just going to go off online, get my video over the top. I'll just use Netflix or Hulu or Amazon or something like that. And there'll be more online services coming. So now what you have is a situation where the FCC believes if they can take the control of the set-top box out of the hands of the cable operators, and about 99% of TV subscribers lease that box. They don't go to Best Buy and just buy their own. If they can take that box away and make it an independent piece of equipment, well, then there'll be less ability for the subscription TV provider to filter the type of content or package it in a way that favors their content offerings, their selections, and perhaps limit the diversity of choices that could be available to consumers online. So what it could end up doing is actually making online content even more prominent. And that's not necessarily a great thing for the traditional cable content providers. You'll see that not just the cable operators use this, but it's Viacom and Disney and Time Warner and Fox. These guys all are concerned that what they're essentially doing is taking the content advantages they have in the bundle away and elevating the stature and the prominence of online offerings when this rule goes into effect, assuming it's adopted on a majority vote before the year is out.
I see. So, in a sense, it could, give rise to somebody like an Apple to come in and not only introduce a box, but steer the content essentially away from linear TV more towards on-demand.
Theoretically, it could do that. And it's interesting that you mentioned Apple, and now I've actually had Apple stock myself for a long time, in full disclosure, but it's interesting that Steve Jobs, I think around 2010, was asked about why Apple hasn't done more to penetrate the TV market. They had the iPhone, they had iPads. The thinking is, well, what about more on the TV side? And he made a comment about how it's just difficult to go to market if all you're doing is just adding another box to the current pay TV subscription consumer. Because if you don't tear up the box and start fresh, it's very hard to penetrate that market. Well, if the content of the linear provider, the cable operator, for example, has to be provided to the independent device maker, well, then everything could be seamlessly integrated into one device to cover all types of video options that consumers want.
Interesting. So, I believe in your most recent note, you said this is going to be a very topical event for lawmakers in Washington. Can you elaborate on that?
Yeah, they're already getting into this because the content companies and the cable operators have gone up to Capitol Hill complaining about this. What they're saying is that there's a whole bunch of technical problems with doing this and legal problems. Um, Content companies contract with the cable operators to get prominent placement within the channel lineups, for example. It's much better to be on channel 25 instead of channel 250, for example. And companies pay for that. And not only that, there's privacy issues, copyright issues, concerns about how advertising might be inserted against their content if it's disassembled and repackaged by a device manufacturer, offering sort of what would look like almost a different type of packaged video service. So they've been complaining that this is unfair, this is technically difficult, it is legally questionable. And the biggest argument that they make is, it's not as if people aren't seeing choices beginning to emerge. You have TiVo out there already, but you have a lot of developers of apps that can be provided over mobile devices that already there's a lot of innovation happening, and that if the FCC intervenes with a rule, that could actually freeze some of that innovation and slow some of it down. And most of all, they're concerned that the government shouldn't be in here trying to dictate technology choices, that they should stay out, let the market develop on its own, and that a lot of progress is already being made. Now, some members of Congress have made that point. Other members of Congress back what the FCC is doing. So what you're seeing already is that lawmakers are beginning to engage because the parties affected by this have been going up to the Hill trying to get more interest from their sympathetic lawmakers.
I see. And as far as the consumer advocacy groups, I mean, how would they play into this whole equation?
Well, what they'd say is that the FCC for 20 years has had a statutory mandate to try to jumpstart retail video navigation device competition, set-top box competition. The FCC has tried in the past different efforts, cable card being one of them. They haven't been successful. So what they're thinking is they've got net neutrality done. We'll see how the courts deal with it. That's a big issue. But the set-top box is another way that the cable operator could be a gatekeeper of sorts, or the telco TV provider, for example. And so that they need to take that potential choke point away to allow more openness and diversity in programming and content choices for consumers. So for them, this is a critical part of their overall effort to sort of commoditize or dumb down the distribution side that the cable operators provide and make sure that on the edge, consumer-oriented products and content can develop and innovate. So that's what they want. The vision itself is not a bad one. I think most consumers hate the idea of having multiple boxes and multiple remotes and having to go back and forth among multiple TV inputs. And the idea is there a way to just simplify this for the consumer and lower their costs and give them greater innovation? I think that's a terrific vision. The question is if the FCC intervenes here with technology mandates through final rules, does that really further the process, or does it begin to distort the process or actually impair it, because there'll be so many legal fights and so many challenges to come up with open standards that everyone can agree on? And that's a big challenge. Can they even come up with standards that work?
I see. So I mean, if we're going to think about the timeline here, the FCC has opened this up essentially for proposed rules, but in terms of implementation or when we can actually expect to start noticing some change if this were actually to move forward as the FCC plans. I mean, what are we thinking in terms of timing here?
Well, the FCC is going to take comments on this for a couple of months, meetings. They'll try to come up with rules late in the year. My guess is if they do it late summer, maybe in the fall. Of course, we're in an election year, and that often complicates the ability to get things done that are somewhat controversial. But assuming they can get it done, you'd have a rule in place toward the end of the year, and then the FCC says that they would put a mandate out there that essentially tells the industry to work it all out, have an independent standards advisory committee to come up with open standards for device makers and the operators and the programmers to all comply with within about 2 years. Now, the industry says it's technically an insurmountable challenge, but the FCC believes it is not, that there are ways to make this work, that it's not as hard as they say, and that standards can be achieved. So you're looking at maybe the 2018 timeframe when standards would supposedly be in place and device makers could go to work with them. Now, if there's an advisory committee showing substantial progress and there a sense emerges out there that these standards will work out and that there will be a technical agreement on consensus standards, then I think a lot of attention will focus on the device makers and manufacturers who could enter the market in a big way. Because right now, Aris is the biggest provider of these set-top boxes. They just merged with Pace. Technicolor does it, but you could see other video navigation device makers become more prominent in this. And Apple's one of them. People think Google would enter the market. Google's a lobbying force in favor of this FCC rule change. Samsung, other electronic equipment manufacturers could get into the game in a big way.
Interesting. So instead of Apple TV being a secondary device, it could just be the box that we're using to
primary device. Exactly.
I see. So this could essentially be a new battleground for a lot of the emerging tech companies that are out there.
That's right, and it's a great vision. The question is, excuse me, is it legally doable? What kind of technical problems will there be with it? And again, there's a lot of little complications that have to be worked through. And Commissioner Rosenworth, so one of the 3 Democrats, it was a 3-2 vote. The 2 Republicans on the FCC dissented. But one of the 3 Democrats said there's a lot of execution concerns here. The vision is a great one, but can we check the box on all of these technical and legal practical difficulties in getting from point A to point B on this? The hope is they can do it. And the chairman of the FCC, Tom Wheeler, believes they can be done. But we'll just have to see over the next year or two if this really materializes into something that will change the way consumers watch TV and what devices they use.
I see. So, I mean, over the course of the next 6 months to 2 years, we're going to be noticing a series of new developments to basically gauge whether this is going to be feasible or not.
That's right. I think that's right, because what will happen, I think, is the FCC, assuming the majority sticks together, they don't have to have it all worked out to adopt the rule. They can say the rule is adopted, industry, you are ordered to come up with standards, and here's our deadline to get it all done. Now, will that be legally defensible? We'll see. It depends on how they write such an order when they get there. But if they adopt this, and again, it looks like they could have the majority to do it, then the pressure begins to build to try to come up with standards that will work. And all it takes is for different segments of the industry to suggest that this can be achievable. And I think increasingly, investors could begin to focus on what type of options could emerge. In this industry, 1.5 to 2 years may not be that long before people really begin to take an interest and start to show it in how they want to invest.
Absolutely, absolutely. Well, Paul, thanks for joining us. This has been really instructive. Thanks for watching. If you have any questions, reach out to sales@hedgeye.com.